Hi, I want you to picture this. You've got 3 active sites that are running concurrently: Nairobi, Mombasa, and maybe one that's up country. Your business is moving, clients are paying, but end month you sit down to check the numbers and you notice something does not add up. There's a version of the business that's only you who sees, and that is the end month version, where the margin should be one thing but comes out and adds something else, where your money came in but you cannot quite explain where it all settled, where you're busy but your numbers suggest otherwise. And if you're honest with yourself, you can't tell me right now exactly where that difference went. And this is not because you're not on top of your business, but because nobody has a system showing them that picture in real time. So that gap between what the business looks like and what it actually produces is not a bad luck. It's not a bad month. It is 3 specific places where money lives quietly every single month with no alarm going off, and that's the funny thing. So today I want to show you what researchers who studied construction sites right here in Kenya found about those gaps. And then I want to show you exactly what it looks like when a system closes it. Let us start with material. So researchers from Kenya, published in the International Journal of Engineering Research and Technology, went onto residential construction sites that are right here in Nairobi, and they did this not to sell anything nor pitch for softwares. They did this just to measure what was actually happening, and what they found out was this: materials account for 70% of the total cost of construction project. And they found that with proper management, just proper management, a 6% saving of that material bill is achievable. 6% may sound small until you apply it on your business, right? So imagine this: 5 million projects will, with a 6% loss, that means every single month, or just for that project, 6% of 5 million is 300,000. That's a lot of money. So if material is eating 70% of your cost project, and up to 6% is just living with no record, that is money that was already yours, already in the budget, and it was money that was already factored into your quote, just gone quietly every single month. And the reason it happens is not because your team is dishonest or anything. It's just because nobody has a system that shows you in real time what came in, what was used, and what cannot be accounted for. That is the gap that the researchers found, and this is exactly what it looks like when it looks like on a screen. As you can see, this is the stock ledger for Kilimani Phase 2. Every movement of Portland cement of this project was logged: the date, the quantity, which warehouse it came from. So here we have 50 bags on 14th, 30 bags out on 18th, 80 bags of cement was issued in just 4 days, and the balance right now is 14 bags of cement remaining in the store. Do you know where those 80 bags went? Well, were they used in the same build, or were they moved to another site? Was there a delivery that never got logged? So without this screen, you're mostly guessing, but with it, every movement is traceable. You can find a discrepancy before it even becomes a loss, and you sort it out earlier. So the researcher said with proper management, you'll be able to recover 6%. To me, 6% is quite a lot. And using this screen, or using a proper system, proper management system, you'll be able to save a lot. So why not invest on a good system? Now let's go to part 2. Now let me show you the second thing I found while doing research, and this one sounds familiar in a different way. So this is the Kenya Engineer, and the official publication of Engineers Board of Kenya, registered engineers writing about what they see in real Kenyan projects every single day. As you will be able to see, they are saying that the cost overrun greater than 10% are common on Kenyan construction projects. That 10% over budget has become the de facto norm. And this is not a warning nor a worst case, it's a norm. Think about your the last 3 projects, did any of them come in exact budget, or was there something else? A price increase, a scope change there, the subcontractor who billed more than they agreed. And this is not a bad luck. This is what happens mostly when the costs are moving fast than anyone is watching them. So here's how it looks like when someone is watching them in real time. As you'll be able to see, this is the cost and the building section on Kilimani Phase 2. It's estimated that the project is around 18.5. The material already consumed from this site is 156,000 Kenyan shillings, and look at the gross margin. It's negative, yeah? So why is it negative? So it's negative because the system can see cost going out, material issue, stock consumed, but no sale invoice already has been raised against this project yet to offset it. So the moment the invoice goes out and the client pays, the number here flips to positive. But right now, cost is moving and revenue is not keeping up. That is the Kenya engineer finding made visible, and not a static on a page, but it's a live number on your screen that's showing you exactly where your project stands before it becomes a problem, and a problem that you cannot fix. Now, the third place, and this one does not have a research paper. It has something though more convincing. It has every construction business owner bank statement. Construction, as you know, most construction contracts in Kenya run on phases. You complete a phase, you invoice your client, pays parts now, and holds the retention until handover. That retention is your money earned. Already you worked for it and it's sitting on the account. So if nobody in your business is actively tracking that schedule or that payment, sending reminders, making follow-ups, escalating it when it goes past due date, that money will be just sitting there on the client's pocket. So for months and even at times years, while you're buying material for the next site, wondering why cash flow always feels tight even when your business is busy. So this is not a client problem, it's more of a visibility problem, and this is what visibility looks like. So this is that, as you can see, this blue bar, it's 480,000 Kenyan shilling sitting here for a couple of days overdue the bucket. It was invoiced in February, but it's still unpaid up to today, from 1st April, and 30 days plus past the due date. So without this screen, is anyone on your business actively chasing that or chasing payments? Or is it sitting somewhere on an email thread waiting for someone just to send a reminder? So with this screen, you click it, you can see exactly who owes you, how much, and since when. You send a reminder, the client gets a professional email with invoice attached to it, just 30 seconds at max, because you already have automated pre-filled templates. So you just edit the client details and within 30 seconds you're done. So when that is your process, every time the system flags an overdue invoice, and not when someone remembers, your cash moves faster. The money you already earned starts arriving the way it should. And while you're on this project, I want to show you one more thing. This is your task list of Kilimani phases. 5 tasks, and right here, foundation and substructure is overdue in red. In a business running without this system, who knows that right now? Maybe it might be the site supervisor, or maybe nobody. Here, as you can see, it's visible to everyone who needs to see it. It can be the project manager, site team, accounts, one screen, everyone aligned. So no phone calls chasing updates. The system shows you, and it shows you the truth, everything in one place. So 4 screens, all from one system, all showing you the same business from different angles. Your materials tracked movement by movement, so nothing disappears without a record. Your project costs live, so you see the margins moving before it's too late. Your receivables edged and flagged, so no invoice sits forgotten for 32 days plus, while your site tasks visible to everyone, so overdue cannot even hide. This is the gap that the Nairobi researchers found, and that is the norm Kenya engineer documented. And this is what our ERP closes, our system, construction management system. And it's not a complicated system that takes months to learn, but with these screens like this one I just showed you, simple, clear, and it's always on. On our next video, I'm going to show you exactly how our company ITKenya implemented this process, what we set up, how long it takes, and the fixed cost with no surprises. But if today was enough, if the end month feeling got you feeling sounded familiar, and the screens that I just showed you look like the visibility your business is moving, do not wait for tomorrow. WhatsApp us directly. Our number is on the screen right now. Tell us about your business, how many active sites you're running, roughly what your monthly project value is, and we shall do a free ROI assessment, and then we go through your specific numbers the same way I went through the research today. Honestly, directly, no fluff. And we look at your current setup. I'll tell you what ERPNext will charge, and we shall give you the fixed cost with no hidden charges. Our call is just a couple of minutes, free with no obligation. My name is Ibrahim from ITKenya. See you in the next video. Kenya's ERPNext implementation partner.